Welcome back. Zydus Wellness Management usually does not speak much, but over the last 2 weeks or so, the stock has been on our radar on account of a large trade that took place. We had, TPG Capital Investment arm selling about 7.5% stake. On the buying side was PPFAS, Parag Parikh Mutual Fund, which bought about 7.3% stake at 1,900 rupees a piece. Since then, seen a rally of almost 7-8% or itself. The company joined us post their fourth quarter numbers, said that they are targeting early teens revenue growth in FY26 with a margin glide path of 17 to 18% in the next couple of years as well. Tarun joins in now to talk more about this. Tarun Arora, obviously the CEO and director at the company. Tarun, always a pleasure speaking with you. We'll speak about the long term, the medium term, the aspirations of the company. But here, in the near term, can you tell us a little about the underlying consumer sentiment? Have we seen any improvement from the last time to now? There have been rains, but also there have been unseasonal rains, which may impact some of your prickly heat powder business.
So, Mangalam, always a pleasure to talk to you and be on CNBC. So thank you for having me here. I think this summer's been brutal for anyone who has a, summer business. And we have not one, but two brands, both Glucon D and Nycil, which rely heavily on this. So it's actually gone worse. And typically in between rain, you're prepared and you do expect some bit of surprises. But there it is. Has been a continuous rain throughout the quarter, throughout the last few months. So obviously it has impacted a lot of our momentum in these two brands. Everything else stays on track, largely in line with what our expectation and plans were. So, it's bittersweet in a way because we've had good traction on some of our initiatives, new products. Our acquisition, Max Protein, has seen a good traction. It's in the right space. Some of the large, high momentum and summer spaces have really pulled us down. So very happy with Everyuth. When I look at Everyuth, Neutralite, when I look at, products like Max Protein, even a sugar-free Delight range. But things
Tarun,
that's what it is.
Tarun,
Yes.
If you could give us a sense in terms of how much these two brands have been impacted. If you have to compare, say, the performance last summer to this summer or the average performance, how much is it lower by?
So, sitting on 30th June, I'll avoid getting into numbers. But I can tell you it's been brutal. It's been worse than we would have imagined. And therefore, I would say that there is always situation when there is off-season rain and you kind of deal with it. It catches up and there is a momentum. But here it has been non-stop. So obviously the impact on these two brands have been significant. And leave it at that. We hope that the remaining 3 quarters will hold us in good stead and help us catch up on the numbers that we wish.
So the early teens revenue growth guidance that you've given for this year, does that stand at risk because of what the first quarter was like?
So, look, my view always remains that we'll be a double-digit growth over a medium term, and therefore we retain that view from a medium term. For this year, like last time I spoke, and the numbers change every day. So I think rather than me commenting on if that number changes, we'll have the numbers once we publish it. But our focus remains to execute consistently, and whatever we lose this quarter, we will try pretty hard to recover through the next few quarters. But that's
just from a bookkeeping standpoint, how much do Glucon D and Nycil account for in your overall annual business?
We don't specifically share brand-wise numbers, but their largest share of numbers happen between Q4 and Q1. Almost 85-90% of the business happens between these two quarters. So therefore, there's a big chunk sitting for these two brands.
Let's talk about a larger trend then, Tarun, because you had indicated that the rural markets have been outperforming for you all as compared to the urban segments. Is that trend still playing out, and by how much of a margin? And do you expect that trend to play out? If you could just give us more details.
Sure. So I've seen over last financial year and even continuing trend, if I really look at it, rural has been 3 to 4%, as reported by all syndicated data, been growing faster than the urban. Of course, urban gets compensated because when I look at sources like Nielsen, they do not cover the quick commerce, so it gets compensated. But from a consistency and a general trade point of view, rural has been always leading. Even our distribution is substantially, disproportionate to the share of sales. So 25% kind of sales coming from revenue coming from rural, but almost 50-50 share between equivalent presence in our distribution for rural and urban. So clearly we are prepared for a larger growth in rural, and it's consistently done. Urban, I'm hoping that post this, current actions that the government has done, they've action on tax, the interest levels have been lower, some level of urban momentum will catch up. The good thing is, I do see some categories still showing a good urban momentum, some premium spaces, newer building spaces. So that can really keep us doing well in urban as well.
Got that. The only problem is that the contribution of those are not as much to drive the entire bus forward. They're just enough to, spur near-term growth. Just wanted to understand about, the MFD category, right? Because milk prices have increased, and typically when that happens, categories such as Bonvita, Horlicks, Boost, Complan, all of them see a bit of a downtake. Add to that, you've also very recently had a leadership change in HUL, where the foods business has a new leader with a view to grow Boost and Horlicks. So there is strong competition, a new leader among, the competition places, and higher milk prices. In light of that, what's the prognosis for Complan?
Sure. So first of all, I think if they manage to grow the category, because first of all, I think we need to recognize there's a category level issue. And a market leader with 50-55% market share, if they drive the momentum forward, I think it'll be good for everyone. So I really hope that they succeed in what they're wanting to do. So I'm less worried about competitive action, but I'm more positive. I'll be more positive if the category really shows a higher momentum and if they are able to do that. So I'm completely with any actions they take, which is category building. Having said this, for us, I do recognize that there are opportunities for Complan to fight against the challenge that we face at a larger level, environmental level. And therefore, we are trying to place newer SKUs, newer, need spaces, which Complan never serviced. For example, the last year, about 8-10 months back, we launched an adult nutrition VMAX. We also have a Complan NutriGo, which we'll try and rework and build it forward better for the future, which is in the toddler space. There may be a couple of more ideas over next 3 quarters that we will explore. We have it in the pipeline. We'll just take a call basis of how the market shapes up. If we could help launch those as well. So my view is that, one, I would hope that the leader really moves the market in this tough environment where the milk prices are going up. There is other alternatives which are driving forward. While we do that and we'll wait for them to act on it, we are looking at segments or need spaces where Complan has opportunities, and we're building around those. So as the market moves up, we could move even faster as we build around.
Okay.
There's also an opportunity around clean labels, which we'll consider across our portfolio as consumers are getting more and more conscious about some of those things.
Okay. Tarun, you join us on a day where there's a huge deal which has taken place in the pharmaceutical space, and that has many OTC brands. It just reminded me of the Heinz India acquisition, which took place in 2019 by all, and that was worth around 4,500, 4,600 odd crores. Just give us a sense in terms of what the M&A strategy would look like for the company going forward. Any such big transactions on the cards? What would be the cash on books which you would be ready to deploy?
So first of all, I think we've clearly M&A has been part of the strategy at Zydus Group and Zydus Wellness itself. It allows us to one side scale, which is what Heinz deal did, but also play in spaces that we want to, which is food and nutrition on one side and skincare on the other side. We do believe there are spaces where we can build further and add to the our portfolio in the right direction. Food and nutrition, which is already a much larger part of our portfolio, we are very, very keen that we can continue to add. And that's why this Right Bite deal happened, where we have Max Protein, which is really helping us build and play the protein part very well. We do believe there are spaces like, VMS, which we could increase. There are some health food opportunities we are looking at. There are also skincare spaces. And third, which we look at is increasing our footprint beyond India, which will help us play a much larger game. And last, fourth, which I would say that we evaluate is from a D2C or a online space, which gives us a big opportunity. So if you pull this together, we're looking for deals which make these four, which tick at least 1 to 2 of these boxes. Right now, we've recovered all the cash that we had deployed for Max Protein, and that should be good for us. Further deals, largely, we will try to do without any external input. We'll either be self-generating cash or debt.
Take that point. And finally, before we let you go, Tarun, what's the long-term aspiration of the company? 5,000 and 7,000 crore revenue by when?
That's mathematics. In a continuous basis, without accounting for any acquisitions, I think a good double-digit teens growth should take us 4 to 5 years. Add to some exciting acquisitions that we are evaluating most of the time, it could get much faster. But no specific time frame for me to share. Organically, we obviously have an inside plan, but could happen much faster if 1 or 2 of those deals really shape out.
All right, so the street will read that as 3 to 4 years, 5,000 crores is something that you get at with close to 17 to 18% margins. That's your aspiration. The funds which are buying into the company are hoping for that to happen as well. We take a short break, come back, get you more opinion on the market on CNBC TV18. Stay with us.